please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Nifty as well, up about 35. That's 10,520.
Let's see how it moves on from here on. 2.6%, 2.8% over, now 3% over is what we have on yesterday.
Technically, market is not ready to go down, but market is extremely well back.
The increase in the yield where mark-to-market provisions will hit most of the banks. That is one factor more than the provision, which will impact the performance of all the banks.
The Delhi High Court passing very clear orders that all the assets stated in that affidavit by both RSC Holdings as well as Oscar Investments, they have now been attached and now will be liquidated and will be valued.
The market is up almost 80 points and it's looking pretty good, 10,570.
The zone is here now, 10,582 is what we have. You start to cross 10,640, 650. I think you'll have more short covering. Even the stubborn shorts will, try to cover. And of course, on the bank, today's big story was the return of stocks like HDFC Bank.
No Monday blues on the Wall Street. Nifty and Sensex closed with gains of nearly 1% each. Private banks, autos, L&T all outperform. IT stocks see a dip.
The Nifty clawed back to 10,500, but experts remain wary. Big bull Rakesh Jhunjhunwala says he's unsure whether earnings will catch up with valuations. Bank of America Merrill Lynch's Kaku Nakate too expects markets to stay under pressure.
NBFCs and private banks lead the market up move today despite higher bond yields. PSU banks, however, underperform, close with a loss of over 0.5% at an index level.
Steel companies see all-round buying as global steel prices spike. Meanwhile, IT stocks lose as the rupee rises against the dollar.
And another setback for the Singh brothers in the Daiichi Arbitration Award case. The Delhi High Court attaches assets of their holding companies, Oscar Investments and RHC Holdings, directs them to submit a list of personal assets that need to be liquidated. Well, those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talk Back, the show where we tell you all about over 8 hours of trading in just 5 headlines. I'm Lata Venkatesh. With me, my colleague Prashant Nair. Hi, Prashant.
Lata, thanks very much. And we'll get to those top 5 market stories. Over the next 30 minutes, we will discuss those. And of course, our experts will answer your stock questions as well. Joining us now to help us do that are Deepan Mehta, member BSc and NSC. And we also have our technical expert, Ashwini Gujral. Gentlemen, thanks very much, both of you, for being with us here on the show. Before we come to you with the questions, let's quickly wrap up the day's story in terms of what really were the dominating drivers. It was a good day, second day, and of course, 3 days in terms of making of this recovery at crucial levels, though. Lata.
Well, it does appear that the good news came from global markets. The US bond yields on Friday fell from 2.95 to 2.87, indicating a sharp rise in bond prices. And that fall in yields kind of unleashed risk across. We could see it in Wall Street indices, Asian indices, commodity markets, steel prices. It appeared on Friday itself that we had built some kind of a base. And so this global tailwind was coming on already slightly positive environment in India, and we could see the bulls take advantage of that and kind of, gush forward. We could see banks and NBFCs climbing, but not public sector banks. So clearly there appears to be also a flight for quality here. And we could see that even in the Nifty, it was more quality stocks that kind of led the rally.
Well, absolutely. And I think that really was the crux of what really happened today, because public sector banks in a way stopped falling. I mean, they were lower, but they were down about 1/3 at the index level. Private banks soared. So let's just quickly take you through what happened. And these are the top index gainers: Maruti, Larsen & Toubro, Tata Motors, IndusInd Bank, Axis Bank, Bajaj Finance. You had names like Kotak, HDFC Bank, spread through, and there was a fair bit of variety out there. But again, I mean, if you had to identify one sector, it is private sector, financials, banks included. Losses in Sun Pharma. Sun Pharma, of course, had a big day on Friday. TCS was lower, Infosys was lower. IT from the start of the year has done very well, especially mid-cap IT that gave up a little bit of those gains. In terms of the futures and options segment, you had action in Chennai Petro, Torrent Power, late surge. Equitas was higher, huge underperformer. Voltas, Ujjivan, you had something like a Reliance Naval, Reliance Communication, etc., which were seeing a fair bit of action today as well. There was a big loser, which is Oriental Bank of Commerce, and that will come up for you separately. But that's basically some of what went on in a trade. Overall, a pretty good day for bulls. Lata.
Point taken. With that, let's go over to Ashwini to check out whether this rebound has enough legs to run for a bit more. Ashwini, that's the question. There may be late bulls today, and there may be those who would have taken profit today. What would be the advice for tomorrow?
So the point is that this is fairly strong, and tomorrow I would think that after 2 strong days you could have a bit of a sideways day. But what will tell us whether this is the real thing is that what happens from 10,600. If we come off 50 points and again make an attempt and successfully cross 10,600 in the second attempt, then possibly the market is completing its correction. But if we hit that 10,600, 630 zone and return and move towards fresh lows, then that would mean that the correction has restarted. The odds of the second outcome seem to be lower, because even today we didn't find any sort of dip, and the real short covering will start only beyond 10,630, 650, where longer term and bigger shorts tend to cover. So I think tomorrow you will probably know the answer of whether this is a pullback or the real thing.
Okay, what would you do, Deepan? Believe that there is enough gains to come? Are you already bargain hunting, or will you wait for better levels?
I think already bargain hunting and gradually putting money to work in this market. Downside seems to be protected at this point of time. Those which we had post the sell-off seem pretty strong at this point of time. Okay. Fundamentals, you see no deterioration at all. Earnings have been pretty strong this quarter. And by and large, I think there are enough investment opportunities, and with slight correction, margin of safety also has crept in. And you could just buy good quality blue chip companies and hope to make good returns over the next 3 to 5 years. But in correction phase like this, best to focus on quality and not chase momentum.
Okay. Well, we're going to play out to you two guys who are actually wary of the markets at this point in time, and that brings us actually to our second headline of the day. While the markets did see a rebound, market veterans indicated wariness. Big bull Rakesh Jhunjhunwala says that he is confused about the market, says that he does not know if earnings will catch up with valuations, while Bank of America Merrill Lynch Kaku Nakate also expects to see a 7 to 8% cut in the Indian market. Let's listen in to these stalwarts.
Technically, you don't have a situation where market is prepared to go down, right? And you have the highest squeeze in history at the lowest level of profit should you. And one of the most bare growth in profits in the last 3-4 years. Ask Ramdev how many times he has revised his earnings predictions in the last 3 years. So now the question is, technically market is not ready to go down, but market is extremely well valued, right? So the question is that has market priced itself for the increase in profit growth? That's the dilemma I have.
And if it doesn't happen?
Yeah, so I am not going to put my money in anything against other than equity. And I'm going to put as much as my dividend income as interest every year. Because we'll find opportunity. But I think this is something which all of us have to mull.
Demonetization and GST impact on the worst end has already gone through. The upside is now going to come. Of course, rains have to be important. And bank recapitalization overall for the steadiness of the market is a must in my opinion. So the market from here, I don't see a downside more than 8 to 9%.
All right, so some confusion, some wariness and skepticism. People asking questions. I mean, can't complain. Many would say it's a healthy sign. But one thing is sure, that go-go kind of momentum and sentiment, which was so prevalent even a few weeks back, that is missing now. We have got some questions now, and this is the first one that we're going to put to our viewers. Twitter user Anup Kumar Dubey shares a Bajaj Auto. He bought the shares at 1,921 rupees 3 years back. He wants to know the growth potential of the company and whether he should continue to hold or whether he should sell. Deepan, let me put this to you.
Our preference is for Eicher, a company in which we and our clients are invested, and even at this price, I would consider switching out from Bajaj Auto into Eicher. I think Bajaj Auto clearly has stagnated over the past few quarters or so. Even TVS Motors has done far better than Bajaj Auto. And, this entire thing of the company to focus only on motorcycles has kind of, affected their growth rates. And I would say even at these levels, better to go into some of the more comprehensive or the more other auto companies which have got models everywhere than going with the Bajaj Auto. So that's my take.
Fair point. Let's get more stocks in. Here's a tweet that we have got from Nilesh Prajapati. He wants to invest in L&T, wants to know the right time to enter the market. Sorry, Ashwini, we try to tell our viewers that they ought to give us more data, but this is all we have by way of a question.
So he wants to know a good time to enter
L&T.
L&T. See, this is a good time to enter L&T. It's corrected from 1470 to about 1280. Put a stop around 1280, and I would think it should get back towards 1470 and maybe even a higher 1650, because the next phase is likely to be the investment phase of the bull market, and stocks like L&T and several other capex heavy stocks are likely to do well.
Okay. If I can ask a sub-question, Ashwini, you said that if 10,600 is crossed, then the market has more potential. Where will be the next congestion, or where will it meet resistance next?
See, once this 10,600, 650 is taken out, then you have basically 11,000, 11,100. It's back to the previous highs. Okay. But they may not get crossed. So this year, we'll toggle in this 10,200, 11,000 band up and down, because at 11,000, some snake will bite and again you'll come tumbling down. Okay. This year is likely to be sideways, and most of the time people will not know what they should be doing.
All right, snakes and ladders game, but at the moment it's ladder.
Nicely put.
Yes.
Snake will bite. Okay, let's go on to the third headline of the day. Bank stocks led the up move on Dalal Street, with private banks rallying over 1.5% in trade today. We're talking about the index. The public sector banks, however, were moderate in trade and ended with small cuts. NBFCs also gained in today's trading session. I think we've got a question now. Atul Saxena has written to us via an SMS. He has 20 shares of Axis Bank. He's paid 530 rupees a share for them. He's a medium-term investor and wants to know if he should hold or sell. What are your thoughts, Deepan?
See, I think if he doesn't have some of the other frontline retail-focused retail lenders, then it's a good time to switch. Out of Axis Bank, something HDFC Bank, IndusInd Bank, yes, Kotak, I think there are better choices than Axis Bank. Clearly, Axis Bank, they still have this confusion over the NPAs. Secondly, they are not growing as fast as some other peer groups. So, in fact, technically, they are losing market share compared to some of the other private sector banks. And I would say that, because of all the legacy issues, they seem to have lost the plot at this point of time. Valuation comfort is there in Axis Bank, but this is the time to go for growth. So, I would say go with the IndusInd Bank or Yes Bank or even Kotak Mahindra Bank, HDFC Bank. You may get a higher return than in these companies than Axis Bank over a 2-3 year period.
Okay. The next question I have, I'm going to read it out and hide under the table because I expect Ashwini to get angry with such investments. Ashwini, this is a tweet we have got from Dhimant Mehta. He has shares of Oriental Bank of Commerce, which he bought at 152 rupees a piece. That's all we have. Wants to know whether he should hold or sell.
Well, I guess his money has been taken away by the jewelers. So, see, I've been saying that these guys will become 2-digit. The first one, OBC, has gone to 2 digits. Others on the way are PNB, BOI, etc. The earlier you get off, the better off you will be, because to change the entire, banking system is going to be a tough thing to do. So, my guess is get into an IndusInd Bank, Yes Bank, HDFC Bank, etc. This guy is not going to come back so easily.
Okay, Dhimant Mehta, you shouldn't be sitting on losses now. it's better to just swallow it and go ahead. And both our experts are converging on the kind of banks that you should concentrate on, retail, private sector banks. We are going to take a break on that note, but we are coming up, and there's another segment that did extremely well today and has been doing well. Steel companies, they outshone even the IT stocks today. We'll bring you all those details in a minute.
You're with us here on Markets Today Talk Back. Deepan and Ashwini have been running us through what they make of the market, answering your questions. We've done three top stories of the day. Let's get to the fourth one. The steel companies are seeing all-round buying in trade today after global steel prices spiked in trade. Remember, steel stocks have been doing even better last week, but they continued the momentum though to a lesser degree today. IT companies, however, are lost on the back of a stronger rupee. Manisha Gupta is here to decode the steel sector rally for us. A lot of it is global, isn't it, Manisha?
Well, it has started as a very positive week for the ferrous metal prices, where steel saw nearly 3.5% of gains and hit a 3-month highs. The major trigger for that really came in from Tangshan, which is one of the cities in northern region of China. Remember, 28 cities in northern region of China have been told to cut output in case of steel for winters, but Tangshan says that they will continue to cut output beyond winters as well. And now Tangshan really is responsible for 12% of steel output in all of China, so that really led to the steel prices running up on the higher side. The expectation also is that you are going to look at very strong steel demand going forward, and that has been supporting the steel prices. Not just steel, because of the steel prices running up, you saw iron ore prices gain 4%, and that saw being spilled over in case of base metal prices, where steel ingredients like nickel, zinc, lead also are trading in the positive territory.
Thanks a lot for that, Manisha. And with that, we will try and relate it to stocks. We have a caller, actually. Anand T is calling us from Kerala with a question on Bhushan Steel. He has 700 shares that he has bought at 68 rupees. Go ahead, Anand, your question?
Yeah, good evening, ma'am. I am calling from Thrissur, Kerala. I am holding 700 shares of Bhushan Steel at 67. I am a long-term investor. I would like to know the prospects of this stock. In fact, Mr. Tulchan was very much in favor of this stock.
Yeah, actually, this is a legal issue now. We don't know after the takeover how much of equity value will be left. But Deepan, how would you advise him?
See, I think no doubt steel and other metal companies are doing well. But as an investor, you should try and be in the frontline steel companies like, say, Tata Steel or JSW, where the fundamentals are far better and not so much driven by news or what the eventual outcome of this NCLT proceedings are. So what basically he has done is taken a bit of a punt, whether eventually the present equity holders will get a higher share in the residual company or not. So very difficult to say, but per se steel stocks look interesting at this point of time because of the China factor. And the best way to play them is through a JSW or even Tata Steel, and maybe an outlier could be JSPL, Jindal Steel and Power. That also is on a turnaround spree, and you could see good returns coming in from that company.
Okay, very quickly, let me see if the technical expert has a view on this. Ashwini?
See, technically it's in a downtrend. It's below its 200-day moving average. Now, equity holders are the last in any sort of arrangement. So I think you are missing out a bull market hoping that, 48 becomes 100. So you would be much better off trying to be in a normal steel company which is benefiting from steel rather than takeovers.
Okay, there you are, Anand. The expert saying that maybe you will get, but a sure short way to play would be to go to the non-NCLTs companies which are likely to continue their steel bull run. And with that, the final headline.
Yet another setback for the Singh brothers in the Daiichi arbitration award case. The Delhi High Court has attached assets to their holding companies. The order came in earlier today. Not just that, the court has also directed them to submit a list of personal assets that need to be liquidated. The Singh brothers' stake in Fortis Healthcare now stands at around 3%. The stock ended flat in trade. It had a pretty large double-digit move on Friday. Ashmit Kumar, who's been tracking the story from the courts, is now joining in with more details. Ashmit, over to you.
Clearly, as you said, no end in pain as far as Singh brothers are concerned. The Delhi High Court has gone a step forward and attached the assets of their two holding companies, that's RFC Holdings as well as Oscar Investments, Now, just to give our viewers some perspective, it was essentially a three-part order, and an order that was in pursuance of the 3,500 crore arbitral award, which has now been upheld by the Indian judiciary right up till the Supreme Court. And now the questions of how and when that payment is to be effected is being addressed by the Delhi High Court. In pursuance of that, the Delhi High Court has directed for assets of RHC Holdings as well as Oscar Investments to be attached. Just to give our viewers some perspective, they had submitted their list of assets as of February last year, and that adds up to about 3,200 crore rupees. So as of now, the demand being made by Daiichi, of course, is 3,500 crore rupees. This was part one. The second part is that both these companies have been restrained from working their bank accounts in any shape or form except for payment of salaries as well as statutory dues. And the third part is equally important, that Singh brothers, in their personal capacity, on affidavit, will have to declare before the Delhi High Court an updated list of their unencumbered assets, and they have about 2 weeks' time to do that. The next hearing is on March 23rd.
Okay, thank you very much, Ashmit. All very confusing, and there's somebody who has a question on that. Supriya has tweeted she has 500 shares of Fortis. She bought at 98 rupees. Wants to know if she should hold or sell. She's bought it at a good price.
Get out value can, I would say.
Sorry?
Because get out value still can at 151 or so. There's complete confusion as far as Fortis is concerned. And by and large, I think hospital shares haven't done well over the past 2-3 years or so. Intensely competitive business and very high capital intensity, low ROIs. There are more nimble-footed players in the industry. So I would say my view on Fortis is negative. It has been so. So while you're sitting on profit, better to move on away from Fortis Healthcare. You could look at some of the diagnostic players, like I say, Thyrocare, that may give higher returns than maybe Fortis.
Yes, these are binary things, NCLTs and mergers and takeovers. But nevertheless, the charts may say something, Ashwini?
It's interesting to see how everybody has become such value investors. But value does not come out so easily because everybody knows Fortis is valuable. I think 98 will not come. Okay. So she will be able to get out at some better level. But I would think maybe take half your profit and ride the other half. Maybe you get lucky, etc. But overall, there are better sectors which are making new highs. And metals is one of them. IT is correcting. So maybe getting into a mid-cap IT stock could be much better than waiting for these Singh brothers to sort out their issues.
All right, point taken. Ashwini and Deepan, thank you very much for helping our viewers. Yes, go ahead.
Thank you. Thank you.
Thank you very much for joining us and helping our viewers with their stock questions. And with that, we wrap up this edition of Markets Today. Talk back.